While Tesla stock prices continue to drop, some Tesla bulls like Ross Gerber believe that now is the time to buy more of the company's shares. According to him, it's a good opportunity for investors who are willing to take the risk in such a highly profitable business like Tesla, and are able to see past all the noise and distractions. Hey guys, welcome back to Everything Tesla Stock. Longtime Tesla bull Ross Gerber believes that the dropping stock price does not cancel out Tesla's growing fundamentals. Gerber stated that Tesla is executing wonderfully in its business plan, and there is nobody close to even doing what the car company is already doing. According to the Tesla Investor, Tesla is a company with great leadership and a lot of interesting projects going on. He added that the automaker has been a hugely successful company, and we'll see better stock figures in the future. Why has Ross Gerber said this? More in this video, but before we get into it, don't forget to like and subscribe, and turn on notifications to keep up to date on everything going on with Tesla. There are numerous reasons to believe that Tesla is still making incredible sales and revenues. While there may seem to be a demand problem for Tesla in China, the car company's disclosed that its car demands still remain on a high scale. According to a recent report by the China Passenger Car Association, Tesla sold 83,135 China-made vehicles in wholesale in September, smashing its record of monthly sales in this market. Tesla quickened its China deliveries after suspending most production at the Shanghai plant in July for an upgrade, which aimed to bring the factory's weekly output to around 22,000 units compared to levels of around 17,000 in June. According to the report, Tesla's September market is actually an 8% increase from August, and outpaced more than 5% month-over-month growth of all wholesale electric vehicle sales in China. It also set a record for Tesla's Shanghai factory since production began in December 2019. Tesla further disclosed that more than 483,000 Model 3 sedans and Model Y SUVs rolled off the assembly line in Shanghai for the first 3 quarters of this year, which is almost equal to its total deliveries in 2021. The carmaker continued to invest in its China production. Tesla's Shanghai plant is the automaker's first overseas factory, and it's also its largest, capable of producing more than 750,000 vehicles in a year. It's also Tesla's main export hub. Statistics from the CPCA showed that in the first half of the year, Tesla exported 97,182 Shanghai-made vehicles, accounting for 48% of the total vehicle exports from China. Tesla's Shanghai plant has retained its role as the carmaker's major export hub, helping Tesla to drive up its fast-growing global sales. This could also be a major reason why investors feared a decline in Tesla's demand in China after the automaker lowered car prices in this market. In October, the automaker cut the cost of the cheapest locally built Model 3 sedan by 5%, and also dropped the starting price of the Model Y SUV by 8.8%. However, contrary to beliefs about a declining demand, Tesla is still only reducing the prices of its EVs because it had initially stated that it would. Musk said earlier this year that Tesla may be reducing the prices of its EVs, which have increased 20 to 30% in the past 2 years. Tesla has also had to increase car prices significantly over the last 18 months, owing to economic downtrends and lingering inflation. Therefore, lowering prices now may not be because of a demand problem, but because the car company has found a way to maintain significant revenue in the market while reducing car prices, and at the same time increasing production to meet up with the increasing car demands. In June, Tesla raised the prices of several of its US electric vehicles due to a combination of inflation and supply chain constraints, as well as the shortage of semiconductor chips, which is a significant threat to the company's growth. With the continuous increase in car prices, Tesla may face issues with demand if its EVs are no longer affordable. Therefore, the price cut is Tesla's way of bringing down car prices to an affordable level. It could also be expected that more price cuts will keep coming in the future. Owing to the disconnect between Tesla's growing fundamentals and its stock value, several investors have proposed a share buyback as a way to increase the company's stock price. Musk has also hinted during Tesla's third-quarter earnings call that the car company is working on the right process to do a buyback of anywhere from $5 to $10 billion. It's noteworthy that Tesla is making enough revenue, so a funding buyback may not necessarily affect the company's finances. Some investors also think that Musk's involvement with Twitter is one other reason why Tesla's stock is not performing well. However, this may not be the case. Tesla stock is dropping, and it's got nothing to do with Musk's Twitter deal or any of his comments. Recently, the Tesla CEO has not said much about Tesla, so the drop in the automaker's stock price cannot be linked to what Musk said or didn't say. Tesla arguably does not need Musk as much as it used to. The car company has incredible products already, and based on its already existing market performance, it will likely continue to dominate the EV industry, and also perform well in its other businesses. Tesla's EVs are currently leading in the United States. As of August, the automaker was dominating the US electric car market with a 68% market share. While this share is going down as more EVs hit the market, the decline is slow, and automakers are increasing their US delivery volumes, including Tesla. Tesla also plans to begin delivery of its Semi and Cybertruck very soon. In October, Musk confirmed the start of production of the Tesla Semi-Truck, with deliveries to Pepsi on the 1st of December. Tesla further disclosed that it's planning to produce about 100 semi-electric trucks this year. The car company also announced that it aims to start mass producing its Cybertruck at the end of 2023, 2 years after its initial target date for the long-awaited pickup truck. Likewise, Tesla's FSD will release, and it's actually going to be quite wild. And it's one of the other potential catalysts for the automaker's growth. During an interview earlier this year, Musk said that there will be about 1 million FSD beta testers by the end of the year. Tesla began winding the release of the FSD beta 10.69.31, and many consumers were patiently awaiting this release, and they're finally getting it. Just like the FSD software, Tesla is also recording positive news with the 4680 battery. In a recent update, the automaker stated that it's making significant progress with ramping up production of the batteries. According to Tesla CFO Zachary Kirkhorn, the car company is currently looking at producing enough 4680 cells for about 1,000 cars per week in Q4 this year. Tesla's also gone on record to say that one of its top priorities is to scale up the production of its plants around the globe, as it anticipates rapid growth in consumer demand. According to Musk, Tesla will continue deliveries and revenue production at a 50% or more compound annual growth rate. The car maker has further said that it will increase vehicle production as quickly as possible by upping the production rate in Shanghai and Fremont while boosting production in Berlin and Texas. There is also the potential announcement of new gigafactories in the future. At Tesla's annual shareholder meeting this year, Musk actually said that Tesla could eventually build as many as 10 to 12 gigafactories throughout the world. The Tesla CEO also mentioned that Tesla could produce up to 20 million electric cars per year by 2030, with each factory producing between 1.5 to 2 million units per year. Musk has previously indicated that Tesla should announce its next gigafactory location by the end of the year. In this light, there has been strong evidence that Tesla is seriously considering locations in Canada, North America, and even Mexico. Tesla may even be looking to build a new gigafactory in Asia. According to recent reports, Musk has allegedly been in talks with the South Korean government to discuss the possibility of expanding into that market. South Korea's got a good car market, and for Tesla's electric vehicles is perfect. And the automaker's got deep ties with LG and Samsung, which are two giant South Korean companies. Musk has said that Tesla considers South Korea a top candidate for investment. He also expressed willingness to actively invest in EV charging infrastructure in the country. Tesla is on track to gain even bigger revenues in the future, and it will most likely increase the value of its stock. Following a 50% growth rate for the car company, Ross Gerber predicts that the stock for Tesla is going to be worth between $300 to $350 per share by next year. Do you think Tesla can reach that price? Let us know down below, and don't forget to tell us what your valuation on Tesla is. If you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.